Hi, I am Anna. I come from www.ntvforex.com. An orderly start to the week analysis. http ntvforex.com News ID 7AE48B817 2023 am. The weekend was relatively quiet on the news front, with no notable market-moving headlines. However, it did contain its usual substantial quota of human misery headlines, which clearly sell more newspapers. Most notable was the indefinite postponement of the U.S.-China trade agreement review, to give China more time to buy more goodies from the Americans. In contrast to most U.S.-China rhetoric these days, the tone from both sides was refreshingly polite and civilized. China's PBOC announced a one-year 700 Chinese yuan bio medium-term lending facility MLF this morning. The amount was higher than expected, with 550 Chinese yuan bio maturing this month. More importantly, the rate was unchanged at 2.95%, implying that there will be no cuts to China's 1- and 5-year loan prime rates on Thursday. The PBOC seems determined to avoid inflating bubbles in the economy but resisting the urge to follow the rest of the world and flood the financial system with liquidity. In the longer term, that may be a wise policy move, especially with the economy on a recovery trajectory. The higher MLF total should be positive for Chinese financial stocks today. Japan released its expectedly nightmarish GDP data this morning. Preliminary annualized GDP for Q2 fell by 27.8%, slightly worse than expected. The preliminary Q2 QoQ data also came in slightly worse at 7.80%. The GDP data has not shifted financial markets, mostly because it was a known, and because April to June seems like distant history in the context of 2020. The period itself covering huge COVID-19 lockdowns across the world, affecting Japan's export performance. NBSP. The rest of the data calendar across the world today, although extensive, is strictly second and third tier and unlikely to impact financial markets. Financial markets finished quietly on Friday, with currency, equity, energy, and precious metals markets all content end the week aimlessly range trading. That is much the same theme in Asia after a quiet news weekend. Financial markets are content to mark time, awaiting more heavyweight inputs. Intraday volatility is likely to be driven localized news headlines. Equities mixed in early Asia. Wall Street cruised into the end of the week with the S&P 500, Nasdaq and Dow Jones finishing almost unchanged on Friday. Without any direction from New York, and after a quiet weekend, Asia has been left to its own devices, leading to a mixed start for regional equities. With South Korea and Indonesia on holiday today, the Nikkei 225 has edged 0.60% lower after the worse-than-expected GDP figures. The larger-than-expected PBOC MLF has boosted financials in China, with the Shanghai Composite up 1.25%, and the CSI 300 up 0.85%. Hong Kong, meanwhile, has jumped 1.20%. Across the rest of Asia, Singapore has edged 0.25% higher, with Kuala Lumpur edging 0.25% lower in directionless trade. Australia has moved lower as banking heavyweights retreat this morning. The ASX 200 is down 0.70%, and the All Ordinaries has fallen 0.80%. With a lack of market-moving headlines to sink their teeth into, equity markets are likely to continue listlessly ranging for the remainder of the day. The US dollar edges lower in Asia despite the noise. Major currencies finished the week comfortably ensconced within their one-month ranges. A lack of headline action over the weekend, notably no fireworks on US-China trade, has seen some gentle US dollar selling resume in Asia. The EUR/USD has edged 0.20% higher to 1.1860. The January 1920 region remains the critical resistance zone for the single currency. GBP/USD has edged higher to 1.3105, almost precisely at its one-month 1.3000-1.3200 midpoint. AUD/USD has climbed 0.30% to 0.7195 today, boosted by a lack of US-China trade fireworks. It is, however, still well shy of its 0.7240 triple top, and like GBP/USD, remains anchored in the middle of its one-month range. Asian currencies have edged higher after the postponement of the US-China review session and another strong CNY fixing by the PBOC. USD CNY has fallen 0.15% to 6.9400, with the SGD, THB, and MIR all edging 0.10% higher versus the greenback. Markets should continue to take their cue from the Euro-USD pair for future direction. Having led the US dollar rotation initially, Euro's ascent stalled at January 1940. A daily close above January 1940, or below 1.1700, will give strong clues to the next big move in currency markets. In the meantime, summer doldrums persist, and patience is required. Range trading persists in oil markets. Oil markets had a quiet Friday session in directionless trade. Brent crude fell 0.25% to $44.90 a barrel, and WTI fell 0.30% to $42.30 a barrel. A weaker US dollar this morning has supported oil, with both contracts edging 20 cents higher to $45.10 and $42.50 a barrel respectively. NBSP WTI continues to flirt with its 200-day moving average DMA at these levels, but also now has firm resistance at $43 a barrel just above. Support lies at $41 a barrel. Brent crude has resistance at $46.40 a barrel, followed by its 200 DMA at $46.60 a barrel. Short-term support lies at $44.30 a barrel. Oil markets continue to be in a state of equilibrium at these levels. We note that speculative interest in the futures has also fallen, suggesting that short-term traders' eyes are looking at opportunities elsewhere. The resurgence of COVID-19 around the world, notably Europe, appears to be crimping consumption expectations, meaning that oil has not caught the full tailwind of a falling US dollar. We are likely to experience range trading for some time to come. Both gold and silver continue to lick their wounds. The frenzied volatility of last week on gold and silver has clearly inflicted a lot of pain on the FOMO crowd. Both metals eased into the week's end, in consolidative price action as traders licked their wounds. Gold fell 0.45% to $1,944.50 an ounce, and silver fell 3.80% to $26.4500 an ounce. NBSP today's session in Asia has been quiet so far, with both metals almost unchanged at $1,942 and $26.2950 an ounce respectively. Asian traders are unlikely to rock the boat today, with financial markets, in general, drifting aimlessly. The present levels give no clue the next direction for precious metals, and the wise would be best to wait on the sidelines for the gnomes of Wall Street to arrive at their desks. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://m.me/mt5.expert.advisors.